All right, folks, welcome back to your daily silver video. If you want silver news brought to you on a daily basis, then make sure you click subscribe. We have a very shocking article today. Check out this very bold claim. Suppressing silver prices has been official U.S. policy since 1965. Now, this article came out last week. It's still fresh off the press. But when I saw the date 1965, it stood out to me. It reminded me of something. Silverwars.org is a website that shows the military's involvement with silver. Now, this is a timeline. Now, here it is, who we are, exposing injustices plaguing the silver market. But in this website, there's a timeline. And check out what date the timeline starts. Unveiling the Untold, a silver timeline. It starts with 1965. The Coinage Act of 1965. Quote from Lyndon B. Johnson, "In the face of this worldwide shortage of silver and our rapidly growing need for coins, the only really prudent course was to reduce our dependence upon silver for making our coins. If we had not done so, we would have risked chronic coin shortages in the very near future." When you really step back and look at the bigger picture, especially looking at the statistics, which in 2002, the National Defense Silver Stockpile goes to zero. If you look at this from 1967, which is the United States of America National Defense Silver Stockpile, see how it's dwindling down to 2002, and then look at the Department of Defense Silver Stockpile from 1972 all the way to 1995, and you could just see it's only getting worse. We need more silver, more eagles, but less and less of it. So that's why when I saw this date, 1965, suppressing silver prices has been official U.S. policy since 1965, it stuck to me, right? That date stuck to me from Lyndon B. Johnson, which is the U.S. Coinage Act of 1965. So that's a little bit of context of where I went when I read this. I did not read this article yet. I want it to be brand new, going along with you in this journey of this type of information or this bold claim. So let's just jump straight into it. So in the July 18th edition of Gold Newsletter, edition and publisher Brian London wrote about the failure of silver prices to keep up with gold prices. Quote, "I'm not the kind of conspiracy buff that many of my friends in the industry are," London wrote, quote, "but it's hard to look at silver and not see some hidden hands at work, especially considering who holds so much of the metal in both physical and paper forms while acting as custodian for the biggest silver exchange traded fund," end quote. Of course, London meant investment bank JPMorgan Chase and the silver ETF SLV. Now, a little bit of history on JPMorgan, which is the shadiest bank in the world, is that they actually got caught red-handed manipulating the price of silver. Now, they had to pay a $920 million fine, and two of their employees got sent to prison for this. They got caught red-handed. And this is in the form of spoofing, which is placing false buy or sell orders on the exchange, canceling the order before it goes through. But when they mention this SLV stuff, when they're talking about, the COMEX, this is a whole other type of price suppression. This is flooding the market with paper contracts, paper silver, when there's not that much actual silver in the world. And if everyone tried to turn those contracts into physical delivery, it would expose this. That's how they suppress the price. It's a facade. The Hunt brothers tried to do this in 1980, bought up all the silver on the COMEX, turned it into physical, and that's actually what exposed the facade, and the government had to ban silver on the spot, and that's actually what pushed silver to the highest price still till this day. So if we have a bank that already got caught red-handed, for sure manipulating the price, employees getting sent to prison, paying over $900 million fine, and those are the ones in control of the COMEX, it doesn't take a rocket scientist to see what's going on. Now, why anyone would invest in silver or other precious and monetary metals with JPMorgan Chase can be explained only by ignorance. In the last decade, the bank has pleaded guilty to 5 felonies and has paid more than $1 billion in government fines and civil lawsuit settlements, including a $920 million fine for manipulation of monetary metals by markets and some of its traders, and that's what I was just mentioning. But did you see how they said over $1 billion? See, here's the thing. Before that went to case, that the historic $920 million fine, people getting sent to prison, they always gave these banks a slap on the wrist. It wasn't just JPMorgan. Merrill Lynch also got caught spoofing, and the Dutch bank also got caught spoofing. Now, they used to give it a slap on the wrist, and that's why they continued to do it. Nobody went to prison before. But now, if you know that you might actually go to prison for doing this, it might make you second guess it more than just knowing that you're going to get a little fine. And a $920 million fine, that's still extremely small, but these banks only used to get a couple $1 million fine before. So of course they had no type of agenda to stop. They had no consequences, no penalties. So anyways, let's keep moving on though. But silver market manipulation has been bigger than even JPMorgan Chase. Indeed, a silver price suppression has been U.S. government policy since President Lyndon B. Johnson signed the Coinage Act of 1965, which removed silver from the country's money. Signing the act into law, Johnson proclaimed, quote, if anybody has any idea of hoarding our silver coins, let me say this: Treasury has a lot of silver on hand, and it can be and will it be used to keep the price of silver in line with its value in our present silver coin. There will be no profit in holding them out of circulation for the value of their silver content. That's ironic because he talks about how we need so much silver and how scarce it is, but at the same time telling people that we have plenty of it and you shouldn't hold it. He's saying that because he doesn't want people hoarding all the silver because he needs it himself, especially looking at the military's involvement. So anyways, it's not known how long the U.S. government strategic silver inventory lasted after 1965 and how much was used for executing the price suppression policy Johnson proclaimed, but eventually collectors and investors did exactly what the president warned would bring them no profit. They removed the silver coins from circulation and hoarded them, as the steady inflation of the U.S. dollar made them worth far more than their face value. And that is exactly what people nowadays see. It's like putting your money in a time capsule. A great way to bring this to life for you to understand it in a very easy way is this. Listen to this. They just mentioned, by the way, how it's worth far more than the face value, right? Face value is like 50 cents, a walking Liberty $50, right? The face value of that is 50 cents. So back in the day, 50 cents could get me a gallon of gas. I could go to the store, hand the clerk 50 cents, and get myself a gallon of gas, because gas was 50 cents, with that walking Liberty that had silver inside of it. Nowadays, that same coin can get me a gallon of gas. Wait, Slayer, gas is a lot more than 50 cents. I know. But you could take that walking Liberty to your coin shop, sell it for $20 and get yourself a couple gallons of gas. You see how that one coin can get you back in the day what it still can today, but 50 cents cannot get you a gallon of gas. And that's because nowadays our money doesn't have silver inside of it. That walking Liberty $50 had silver inside of it, so it was valuable. Silver is timeless. It's like putting your money in a time capsule. See, that's what this statement means. It's worth far more than the face value now, where Lyndon B. Johnson was saying there's no point in doing this, but that's exact proof that you should. JPMorgan Chase Bank long had been a primary dealer in U.S. government securities and has been particularly close to U.S. Treasury Department. So when the SLV was launched in 2006 and the bank became custodian of the fund's silver, suspicion of government involvement with the bank and the ETF was fairly aroused. The bank now is also the custodian of the metal and of the major gold ETF GLD, prompting more fair suspicion. After SLV was founded, complaints that JPMorgan was manipulating the silver market grew loud enough that the bank felt obliged to answer them publicly. First, the bank's CEO, Jamie Dimon, which is very corrupt. I could go into a dozen stories of him. Maybe I'll mention one in a little bit. But Jamie Dimon said the bank had no interest of its own in the monetary metals and traded them for only clients, right? Only for clients. Then in 2012, the head of the bank's commodity desk, Blythe Masters, went on CNBC to emphasize this denial, particularly in regard to silver. Quote, "There's been a tremendous amount of speculation, particularly in the blogosphere, on this topic. Masters told the CNBC reporter, quote, "I think the challenge is that it represents a misunderstanding of the nature of our business. Our business is a client-driven business where we execute on behalf of clients to achieve their financial and risk management objectives. We have offsetting positions. We have no stake in whether prices rise or decline." But since CNBC is a mainstream financial news organization, its reporter failed to put the critical follow-up questions to Masters. Do JPMorgan Chase clients trading silver and other monetary or precious metals include governments, particularly the U.S. government, directly or even indirectly? The answer to that question was provided inadvertently 10 years later and barely noticed by mainstream financial news organizations. During the trial of the JPMorgan Chase traders charged with and convicted of spoofing, which I was mentioning earlier, the monetary metals futures market. The very last paragraph of its July 31st report about the trial, Bloomberg News reported, quote, "Another set of important clients were central banks, which trade gold for their reserves and are among the biggest players in the bullion market. At least 10 central banks held their metal in vaults run by JPMorgan in 2010, according to documents disclosed in court." A mechanism for governments to use their surreptitious manipulation of the monetary metals futures markets was already in place at CME Group, or standing for COMEX Exchange, operator of all the major futures exchanges in the United States. It is called the Central Bank Incentive Program, whereby CME Group exchanges provide volume trading discounts to governments, central banks, and international organizations for trading all futures contracts on CME Group's exchanges. CME Group's master statement to the U.S. Securities and Exchange Commission says, quote, "The customer base of our derivatives exchanges include professional traders, financial institutions, institutional and individual investors, major corporations, manufacturers, producers, governments, and central banks." So there remain some compelling questions in the monetary metals sector. Would Western governments, and particularly the U.S. government, have worked so hard for so long to control the price of gold as documented by the data here, while leaving the other major monetary metal, silver, alone? After all, for many years, the world might have sensed monetary debasement almost as readily from a rising silver price as from a rising gold price. Even if these days, with inflation sending most important prices soaring, it's hard not to sense monetary debasement nearly everywhere one looks, except maybe, as London notes, when one looks at silver. Why do all major bullion banks seem to trade gold and silver the same way at the same time? It sure looks like collusion. If it is collusion, it would violate antitrust law in the U.S., United Kingdom, and other Western countries, unless, of course, the bullion banks are simply executing government trades and thus giving camouflage to government intervention. The Gold Reserve Act of 1934 authorizes the U.S. Treasury Department through its Exchange Stabilization Fund to intervene secretly in any market in the world. That intervention, like this, is going to, or has been going on, essentially confirmed by the U.S. Commodity Futures Exchange Commission, Futures Trading Commission, which repeatedly has refused to answer not just for GATA, but even for a U.S. representative, whether the commission has jurisdiction over manipulative futures tradings undertaken by, or at least behest of the U.S. government on whether such manipulation is legal. By amassing a big hoard of silver for clients and serving as custodian of the silver ETF SLV, has JPMorgan Chase in effect reconstituted the U.S. government's strategic silver reserve for interventional purposes? What exactly goes on every day on the trading desk at the Federal Reserve Bank of New York? What markets are being traded there by the U.S. government? How are they being traded and why? Is the desk trading more than the government bonds it reports trading? Why can't the public be allowed to observe this trading? Is the Bank for International Settlements trading the monetary metals for the U.S. government directly or through intermediaries? In 2005, the head of the BIS Monetary and Economic Department, William R. White, told a conference at BIS headquarters in Switzerland that a primary purpose of cooperation among central banks is, quote, "the provision of international credits and joint joint efforts to influence asset prices, especially gold and foreign exchange, in circumstances where this might be thought useful, end quote. The United States, as a member of the BIS and White's asset prices, easily could cover the prices of other traditional monetary metals like silver. So Gold's newsletter, London, is right that it's hard not to suspect that hidden hands are at work against the silver price, just as they have been against gold. Or at least it's hard not to suspect that hidden hands are at work as long as you're not part of the mainstream financial news organization or an executive of the typically oblivious silver mining company. This is a great article. I think he worded this brilliantly. He broke it down brilliantly. He explained it brilliantly. The data he brought was excellent. The points he made were excellent. And I do think he is spot on. Now, one would think then, why would you invest into silver if the price is rigged, if the price is suppressed? Well, rest in peace, Ted Butler, he passed away a few weeks ago. He dedicated his entire life to this stuff, to COMEX corruption, calling out banks like JPMorgan. He dedicated his entire life till the day he passed. The point that Ted Butler always made that stuck out to me is, yes, this corruption exists, but it will not last forever. The fundamentals will eventually overpower any type of manipulation. If you look at these charts, if you see silver at $27 and see the critical role it plays in not only going green or EVs or solar panels or anything, or even including military, then once, and by the way, we're getting there, once all the silver pie is gone, since everyone wants a slice of the silver pie and there's not much pie to go around, but once that pie is gone, he who owns the gold makes the rules. He who owns the silver wins the wars. We make a pretty penny, but at what cost? If we need so much silver for warfare, for missiles, 500 ounces of silver in a single Tomahawk missile, 11,000 ounces in a torpedo, silver for so many things, but we're running out of it, what does that mean? What happens when we do run out of it? I mean, we can cut down the production of Teslas each year by a few, or maybe put a halt to the Green New Deal or the Green New Scam. But at the end of the day, we are needing more and more and more silver as we advance digitally and technologically, but there's less and less of it, to numbers that we can't even fathom. On paper, 770 million ounces in the red in the last 4 years alone. They're predicting 250 million ounce deficit just this year alone. But the numbers are actually much more because, remember, they don't report. They don't report military. So solar is the #1 sector on the Silver Institute's annual numbers. Military has 0, but we know so much silver goes to military. So a 770 million ounce deficit is actually much more than that. And they don't incorporate aerospace, which, satellites, surveillance, drones, nuclear, so much. So it does make sense. But anyways, I'm going to wrap this video up here. Hope you enjoyed it. If you guys wanted to join the Secret Silver Society, then make sure you click the link in the description. It's a secret group for silver stackers. Actually, tomorrow we're doing the first silver raffle. Everyone every month gets a chance to win, and that's just part of the group. One raffle ticket per member. Unless you're an elite member, you get 2. And also, if you guys wanted to purchase silver, you can email me, slayer@milesfranklin.com, or call me 330-485-6172. My mom just had her surgery yesterday. She's doing fine, but she's going to be out of work for over a month. So if you wanted to help with her bills, you guys can donate to GoFundMe. It would greatly appreciate it. It helps her out. And yeah, so there's a lot going on. We're about to hop on a very interesting call with Andy right now. Another very interesting call with Andy tomorrow, and a lot of content will be posted very soon. Remember, though, I post on a daily basis, so make sure you subscribe if you're new. Thanks for tuning in. This was Silver Slayer. I will see you guys tomorrow. Peace.